looking into what we call disposal of capital assets, or another name is non-current assets. So we have to find out what is a non-current asset. What are we calling disposal? It's not like we're throwing that in the recycling bin. It is basically disposing it from your books. Means it normally gets recorded in your general ledger, and then also they will be on your non-current asset register, where you have a list of all your non-current assets. In this scenario, disposing means we're removing them from all the records of our books. So how we account for the disposal and what impact it has on your financial statements, and also what if you have to do a part exchange. I'm not sure whether I have a part exchange question available though, but I'll try my best to see whether I can find one. Otherwise, we'll do some other questions there. When it comes to part exchange, that means when you're disposing our non-current asset, we give that value, whatever left over there, as a part of a new capital assets we're acquiring. So therefore, accounting for part exchange also can come up in your exam there. So we're looking at it. What is the non-current asset? So here, removal from the existing account balances. That means you have the original cost of the non-current assets. So when we acquire an asset, we normally put the whole original value in our books. That is what we call, obviously, the cost, nominal cost of the non-current assets. And in the books, what we'll do, of the every year of its usage or the existence within the business, we will charge something called an accumulated depreciation against it. So therefore, every year your non-current assets get depreciated and loses value through the time. And whatever value left over after the accumulated depreciation is removed, we call that the carrying amount. That carrying amount is your real expected value for your asset. But it doesn't mean when I'm going to dispose of that asset, we will have that value we have in our books, because what we assumed, it is not 100% guaranteed in the market. The price could be different when I'm going to be disposing it. You also have to remember some of the assets could have something called scrap value or residual value at the end of its life cycle. So therefore, some assets, when you're going to dispose of it, it will give you some money back. Some other assets, though, will have nothing whatsoever, because we use, we abuse, and we get rid of it. It's basically no use at all after the whoever it is. We will not get no scrap value. For example, if you have some furnitures, I have given them 10 years lifetime. I used it for 10 years. It's all falling apart. I'm not going to get no scrap value for that one. So I'll be disposing it without affecting any return for it. But a certain non-current assets, I buy a brand new car. I drive for 5 years for the business purpose. I say a vehicle, not a car, say vehicle. So the cost of that vehicle will be depreciated by the end of 5 years, will have some scrap value when I'm going to use that non-current asset to part exchange with another new vehicle or sell it for the price we are expecting from the market. On that time, the carrying amount, it's not always going to be equal to the value we're going to get in the market or the part exchange value we're going to get. So we need to make sure the disposal account take that into account. So here, a disposal account is a ledger account that used to make the entries related to the disposal of non-current asset. It has two purposes. One of the purposes to remove the existing balance of the disposed asset. The next one is to calculate whether it gives you a profit or a loss on disposal. If your sales proceeding is bigger than the carrying amount, that means you are gaining a profit. If your sales proceeding is less than the carrying amount, it will give you a loss. So that is the purpose of the disposal account. So here, how you account for disposal of non-current assets. So first thing we have to do, we need to remove the original cost from the disposed asset from the asset account. Normally, that has a debit balance because it's an asset. Remember, assets are debits. So if you want to remove it, we have to credit the non-current assets account and then debit the disposal account. And then we will do the similar to the accumulated depreciation account. So what we're going to do, accumulated depreciation is a liability against that non-current asset. We remove it by debiting the accumulated depreciation account and credit the disposal account. And then what we're going to do, we're going to enter the sales proceeding, what money we received, or that value of the part exchange value I have received, they go towards debit to your bank account or the receivable account, or will be a new asset account and credit on the disposal account there. So on the disposal account, that will reduce the value even further. And then whatever the amount we got left over, we'll be able to find if your non-current asset value or the carrying value is greater than your sales proceeding, then there'll be a loss. If you have more sales proceeding than your net current asset value, which what we call again carrying amount, then you will make a gain. That means it's a profit in your statement of profit and loss. So we'll see some example of it a bit later. So let's see whether I can bring that question up for you. Give me 1 second. Let me share window. No, I'll do as a desktop. It's easier if I do as a desktop. Let's bring that spreadsheet here. All right, now first question we have in mind on the disposal. First one, a van is originally costing £12,000, is sold for £2,500. Both amounts are net of VAT, so which is not a concern for me because the VAT is going to be claimed on the purchase, and when we selling it we had to pay the VAT because this is a van. So van, it will be something for the business purpose. I can claim the VAT back. That is for another day to look into. That's probably you're going to look at into your TPFP unit or possibly in this unit. So they're saying here the accumulated depreciation shows the balance of £9,750. So how I'm going to do an account here to find out whether we have made a disposal account. Did we make a profit or a loss when we disposed of this account? So if I'm going to look at it here, I have a debit balance of £12,000. So here we need to credit the cost account and debit disposal account from the original value. So here, this is the first scenario we're going to do. This is the first entry. The second one is we have to clear the accumulated depreciation. So we're going to do debit accumulated depreciation account and credit the disposal account now. So we're going to say accumulated depreciation account for the value of 9750. And then they're also saying here, you sold this non-current asset for £2,500. So what's going to happen? Debit bank account and credit the disposal account. So disposal account will have a credit entry. The amount we received is £2,500. But let's look at from the point what we said earlier. So let's say here, what was the carrying amount? So here, carrying amount for my non-current asset, how much that is. So if I'm going to look at that instant, the carrying amount is going to be this minus that is 2,250. This is the realistic expected value I'm supposed to get for my non-current asset, my van here. But some poor soul, they decided, oh, I'm going to pay you £2,500. What happened on that scenario? Did I get more money than I expected? Yes, I did. So in that case, what it happens here, we have gained £250 on the disposal. So this will go here as statement of profit and loss. I'm going to say here, SOPL, it will be transferred there, £250. So if I'm going to do this, a total, so I'm going to do a sigma sign here. It both matched. Remember, there will be no balance carry down or brought down on disposal. Why? This is going to be either profit or loss, income or expense. This is what goes into your statement of profit and loss. This balances never get carried over to the next period. So in this period, when I disposed of my non-current asset, I managed to gain what we call again a gain on disposal of £250. So let's look at further two questions here. So I have these two questions I extracted from some of the practice papers from different publishers here. I have one of them from Kaplan and one of them from Osborne's, but I'm not sure which one is what though. But let's have a look at it. You may find these questions are eerily similar. So let's see here, this one saying, this activity is about recording non-current asset information in their general ledger. You are working on the accounts of a business that is registered for VAT. During the year, an old van was disposed of. The van was originally bought for £10,000 plus VAT, which was reclaimed. £2,000, they claimed it back already, so it's fine. The 2 years depreciation is applied, and then they're also saying here depreciation is provided at 20% per year on diminishing balance basis. So if you remember in my previous session, I'm pretty sure some of you have attended it, and whoever hasn't attended it, you may already know, but I will try to upload that video as well later on. The diminishing balance basis mean every year there will be a depreciation charge, but the new depreciation will be on the carrying amount. If we say straight line basis, the depreciation is going to be charged exactly same amount every year. Even if it's part year, that will be prorated. So that means when it comes to diminishing balance, it's all about carrying amount. So they're saying here the van was sold for £6,600 plus VAT with the payment received into the bank. So what we need to do, we need to account for all of these in here and then making the T accounts accordingly. So they're asking you here, what are the entries I need to make? Okay, so here, the first one is, what is the depreciation for the first year? So if you need to do that one, you need to understand, we need to find out what was the carrying amount. So we need to know the accumulated depreciation. So on the first year, the depreciation is going to be what? It's the 20% of that. So it's going to be equal to £10,000 times 20%, which will give you, no, not 205. That will be kind of a nefarious. Okay, £2,000. So what you now have to do for the second year, what will be the depreciation? So that time, the carrying amount after you taken the £2,000 away from the original cost is £8,000, and then you're going to times this by 20%, and that one will give you 1,600. So therefore, the total depreciation they have charged is going to be 1,600 plus 2,000, that will be 3,600. So here, the disposal account, and then we also have to have the cost account. So here, the disposal account, if I'm going to do this, they're asking, make the entries into the relevant accounts. They're giving you these two, because accumulated depreciation you don't have to worry about because you just calculated it. They didn't want you to do that one. So they only gave us 3 accounts you need to fill. The first one is make the entries in the accounts which follows to the record the disposal of the van, clearly showing any balance carried down or transferred to the profit and loss statement. So here on the disposal account, we need to get rid of the £10,000 cost. So here £10,000 balance brought down figure. So I need to remove this figure. So how I'm going to do, I'm going to say disposal £10,000. What is the entry here? We're going to say cost account. £10,000. It's basically vehicle at cost. So I'm going to say here vehicle at cost. Okay, so oops, on that I just only want the text. Yeah, vehicle at cost. So we have basically getting rid of this value here. This means this account is now completely balanced. I don't need to worry about this. Nothing to carry over as well. There will be a zero balance for this vehicle unless they have more assets there at record. But what we also know, the accumulated depreciation account have 3,600, which we also have to remove. So if in case it is going to be a T account, if I'm going to think about it, accumulated depreciation, I'm going to just put it here. So accumulated So I'm going to say accumulated depreciation. So here, oops, sorry. Okay, delete, yeah. So here, year one, we have depreciation charge, 2000. It carried over. The next year, the depreciation charge was 1,600. So basically, we have 3,600 pounds. We need to remove it. So what we'll do, disposal, 3,600 pounds. And here on the disposal account, we have accumulated depreciation, 3,600. So we have done those two entries as it's been required from you. This account wasn't there on the answers because they expect you to write this one automatically with this given information here. And the third one is we have paid 6,600 plus VAT, and the payment was received into the bank. So let's not worry about the VAT here. We have really paid altogether 6,600 plus the VAT. How much is that altogether? 6,600 times 1.2. It will be 7,920. But if they ask you to the payment received into the bank, we really received 7,920 pounds. But for this purpose, because they didn't ask you to do a VAT account, I'm just going to ignore that fact and I'm going to write it here. The money coming in from disposal, 6,600 pounds. So here in this disposal account, we'll have bank account 6,600. What really happened here now? If you notice, my carrying amount is going to be this minus that. Can you see here? This is the carrying amount. Did we receive more money on the disposal or less money on the disposal? We received more, isn't it? In that scenario, we need to make sure the difference is going to be on the credit side, sorry, debit side. For 200 pounds, we're going to say it is transferred to SOPL, transfer to SOPL. So basically, this will go in my profit and loss statement on the credit side as an income, a profit. Here, it has increased your profit because we gained 200 pounds more than what we had in our book value as. So they're asking you, tick the relevant box to show whether there is a gain or loss on disposal of the van. So here, this is definitely going to be a gain. So I'm going to say yes to that one. In the exam, you probably be able to tick that answer as yes. Okay, so you probably have a tick box. When you tick on it, it just comes with a tick there. So this is a simple question which may give you almost about 10 to 12 marks. 10 to 12 marks with your eyes closed, because we have to have 3 marks here, 1 mark here, possibly 8 marks here as well. 1, 2, 3, 4, 5, 6, 7, 8, possibly 8, because you have to have a totals all added up here as well. So it's 10,200, 10,200, because you have to total these accounts there as well. So please make sure you look into all the facts applied there, because since they have said VAT has been reclaimed, I'm not going to be worried about the VAT side of it. We're only going to look at the net amount of it. Now let's look at one further question on disposal. Okay, just bear with us, please. Here, Meadow Design is a sole trader organization and you're working on the financial year ended on 31st of December. Meadow Designs is registered for VAT. The business purchased an item of machinery on 30th of September 2024. Okay, so they're looking at the current year as 2016. So probably looking at it, this is all happening in 2026. Okay. 2026. So let's say 2016 because 2026 is in the future. So let's say 2014 and 2016. Okay, so that's fine. They're saying that the machinery was bought for £41,200 plus VAT. And there is a policy of depreciation in the machinery on the straight line method for 25% per annum, assuming there is a residual value of £2,080. That means only part of that cost is going to be depreciated because there is a residual value there. Then, in case we'll be able to find out prorated for every full month the machinery used. So we have to find out the Meadow Designs when they what do you call dispose of this machinery on 1st of August. What was the charge? So they are asking here, calculate the annual depreciation that would be charged on the machine. This is fairly straightforward. How would I calculate it? Because I need to find what is the depreciable amount. So here, depreciable amount is going to be the amount cost minus the residual value. So here 41,200 minus 2,080, which gives you 39,120. 39,120. This is the depreciable value I'm going to charge on my non-current asset. On this scenario, the machinery. So what will be the annual charge? How many years I'm going to be using it? That is the question now. If I say, if I use 25% depreciation on the straight line, I can only do that 4 times. That means 4 years. Why? Every year I'm going to be depreciating 25% of the depreciable amount. So first year will be 25% gone, second year will be altogether 50, third year will be 75, fourth year will be all 100. By the fourth year, you will have nothing but the residual value left on there. So here, this amount is going to be a quarter of that amount we have calculated here, divided by 4. That gives you 9,780. This is the charge for every year. Annual depreciation charge is 9,780. They're asking you to calculate the accumulated depreciation on the machinery before its disposal. So what is the policy here? So they're saying here they will be charging prorated for every full month the machine is owned. Every full month. Okay, so if I bought this machinery on 30th of September 2014, it is not being used that month because it's not been fully used. So it starts from the October. So you got October, November, December. So if I'm going to go here, year 2014, I used it for 3 months. 2015, I'm going to be using all 12 months. Of course, it's going to be a whole 12 months because it's not been disposed after that, isn't it? Now let's look at 2016. So it was disposed on 1st of August 2016. That means August is also not counted. Why? We haven't fully used it on that month. We cannot depreciate something it's not been fully owned. It's not used. So therefore, anything before August. So that means January, February, March, April, May, June, July. 7 more months there. So here 2016, I will have 7 more months and I need to find out the total number of months I have used it. I have used it for 22 months. 22 months I have used it for. If this is my annual charge, how I'm going to find for 22 months? I need to make sure I need to divide this by 12 to find one monthly charge and then times that number by this 22 months. So see, that makes sense, isn't it? They want you to know the accumulated depreciation will be whole of the usage for that 22 months, which's been building up. On the first year, we would have charged only 3 months worth. So how much is that going to be? So it's going to be that number divided by 12 times 3. So 2,445. The second one is going to be exactly the same amount. Why? We're charging the whole year worth. Okay. This is all straight line, guys, because the depreciation doesn't reduce or increase because it is fixed per year. So the next one is 7 months. I'm going to do this, divide by 12 times 7, 5,705. I will still be able to find that number on a different way. I can do this number again. This number divide by 12 times 22. That will also give me the same number. So if I'm going to say this number is going to be equal to that plus that plus that, I will get the same number as well. See, that just makes sense, because both ways, whatever I do, I will have the total accumulated depreciation is going to be 17930, 17,930 pounds. So now what we know, this is the depreciation it should have been charged. So they're saying here, part 3, which is on this side, the Meadow Designs purchases a new machine on 1st of August 2016, trading in the old machine as the part of exchange. The list price for the machine is £54,000 plus VAT. The part exchange value is £14,250. So this has got nothing to do with this question. This is for something else. Okay. So they are asking you here, the remaining balance is paid by bank transfer. Complete the disposal account for the disposal of the machine, clearly showing any amounts to be transferred. So here I need to remember this one was bought on 1st of August and this was part exchange. Okay, so this one is been disposed of. Okay, so this is the amount I have received so far. So this is the accumulated depreciation and this is the cost. So what we need to do, we need to find what numbers I can get rid of here. So for this disposal account, disposal, we need to get rid of that the entry. So let's find out. So what is the cost originally? The cost is £41,200. So we can say here machinery at cost is going to be £41,200. Accumulated depreciation, which we're going to remove from the books as well, is 17,930. And then the last but the least, we have the bank figure, or this scenario, we didn't pay by bank for this. For this disposal, we have got a part exchange value of £14,250. So what happened here now? Let me just bring this up. I'm going to delete all of this. I don't need this. I'm going to give you a picture of how that asset account will look like. So here, we're going to say machinery at cost. So here, what we paid originally. What is the cost of it originally we paid? Say balance board down. £41,200. So here I'm going to say disposal, £41,200. We also now know we received a part exchange value towards the new machinery. So we're going to say again disposal, £14,250. So here I'm going to say machinery at cost, because we received a new machinery now, £14,250. So we have that figure down. Now what we need to do, we have to find whether we have made a gain or a loss on disposal. So I can say that with absolute accuracy, the amount we have here, which is the carrying amount, so this minus that, and the machine at cost, whatever money we got the part exchange value, is well below. So that means we have made a loss on disposal. What is the loss on disposal now? The loss on disposal is going to be statement of profit and loss figure is going to be equal to that minus that. So £9,020 I have made a loss on disposal. So if I'm going to do this here again, that money I have lost because the value of my machinery is not what we expected to get. Really, we have got less money as the part exchange value. I will say no to that deal if I'm a financial advisor, but Here I'm only doing an accounting question. So let's say here, what is the next one? The next one is the original value of the machinery was 54,000 pounds plus VAT. Okay, so they're asking you here, what is the part exchange value? So the part exchange value was 14,250. So therefore, I'm going to say the money we paid out of the bank will be the difference between them. So here I'm going to say bank, the amount will be 54,000 minus the 14,250. So it's going to say 54,000 minus 14,250. So they're asking you how much money you paid from the bank. It's going to be 39,750. Of course, you're going to pay the VAT on top of that as well. So if I'm going to find the real money you paid, that's going to be equal to that times 1.2, which is 47,700. Because I have some questions that came up in the past as well. I was very confused about it when the way they done it, but in this real scenario, I'm going to ignore the VAT because they haven't said that very clearly. The amount transfer from the bank, is it including VAT or not including VAT? I'm going to stick with this number. In the AAT exams, the answers will be much more clearer. Okay, so you have to be just keeping an eye out for those particular statement. You need to show the amount you paid altogether. That is including VAT as well. This one is excluding VAT, and that amount is going to be including VAT. So that's a fairly straightforward question anyway, because this minus that will be the amount for it. So yeah, end of the day, I don't think it's going to be some kind of a concern for us. Oops, control Z. Okay, I'll leave that number as it is. Now let's look at further slides. We have looked at some questions in the disposal now. Now let's look at the control accounts. What is the important about control accounts here? One of them is payables. The other one is going to be receivable control account. You also know they have two different areas. One of them is in your general ledger where you have the whole of that customer, the amount they owe. And then also we have something on the subsidy ledger, which is a receivable ledger, which has individual accounts for your customers. Similarly, we have payable ledger control account in my general ledger. It shows you the whole of the amount we owe to our suppliers. In the subsidy ledger, we have individual itemized bills for all my suppliers. But why we have to reconcile? Because sometimes we may make errors when it comes to the numbers, when you're transferring figures in there, initial entries, could be something related to some errors there. So we normally perform a procedure similar to what we have looked at earlier. How would you do what do you call a disposal? How would you do a control account reconciliation? So what we do, we balance the control account in the general ledger, then we balance the individual accounts in the subsidy ledger, list the subsidiary names and the balances, then we're going to put them all together and check the balances against the total of the subsidiary accounts. If there's any discrepancies, we'll be able to find out what could have caused that discrepancies. You probably heard about this. The errors could be different, like an omission error, what do you call a casting error? Could that be a calculation error, a transposition error? There are multiple different, an error of commission, you may have heard about it, but in sense, the reconciliation process, it's something you learn in your level 2 qualification, which is the bookkeeping control. But here, let's have a look at it quickly. I have a question which has turned up on one of the practice assessments. This is how a question will look like. So they're asking here, you have now been asked to reconcile the balance on a receivable ledger control account with the total of the list of individual accounts in receivable ledger. So they're saying here the receivable ledger control account has 18,967. The individual customer accounts will have 19,317. So there is a kind of a discrepancy. How much is that? Is, let's see here, equal to 19,317 minus 18,967. So it's about 350 pounds. But let's look at it. What could have caused this? Okay. So they're saying here each entry should have one entry next to, if there is no overall effect, check the last column. So we're going to tick the last column, there is no overall effect. Otherwise, we have to have one entry here, how that's going to be impacting. So let's say the total column of the discount allowed day book has been overcasted by 120 pounds. So what we need to do here, what entry we need to make to correct those errors. So let's say, have a look at it. Day book. So here, for example, let's look at the day book here. So if I'm going to have, what is the day book they're talking about? Discount allowed day book. So we have total, VAT, and net. There are three columns here. So the total goes into RLCA. I don't have to go and teach this. These are all level 2 stuffs. This goes to VAT, and this one's going to discount allowed. So now I need to know which account is being impacted by this. This one goes into RLCA on the credit side because it reduces the balance, and these two are goes into debit sides because it's, we already know how this works. RLCA is an asset account. It has a debit balance. When I give a discount to my customers, it brings the balances down. So therefore, this has to be a credit balance. So what they're saying here, when we overcasted the total column, the entry on my RLCA was reduced because I put too much on the credit side. So RLCA on the debit side has decreased more. So what we need to do here, we have to put 120 pounds. It has to go on the debit side to correct something. We put it on the credit side automatically. In the past, my overcast figure increased the credit side. So how I'm going to remove it? By putting something on the debit side. So that is the one entry here. Next one, a credit note of for 315 pounds has been posted to the wrong side of P. Swarbrick's account in the receivable ledger. So if I'm going to look at a receivable ledger, let's bring up a T account quickly. I may have a T account in hand. There you go. I'll put this one here. Let me put it here. Okay, so let's look at that T account. So here, this is going to be for P. Swarbrick's account. So they're saying here a credit note for £350 was posted to the wrong side of P. Swarbrick's account. So normally anything to do with a credit note will be on the credit side of it. Why? This will reduce their balances because normally their balance board down, it's going to be on the debit side. So when you have new sales to them, so like if I say sales daybook figures will be on the debit side, and sales return day book figures will be on the credit side. So the credit note is supposed to have gone on the credit side. So what they have done here, 315 pounds was posted to the wrong side. Instead of here, they put 315 in this side. So how I'm going to correct something's been put on the wrong side? If I put something on the wrong side, the correct things to do is to remove the entry by crediting it once and enter that entry again on the credit side. So you have to do it twice on the credit side. So it's going to be twice that amount here on the receivable ledger. It's going to be 630 pounds, which will be for P. Swarbrick's account. So if I put that number here now, 630 pounds, what it does, it cancels the 315 and then it will end up having the right amount on the right side now. So it will come back to the correct amount on the credit side. So this will be the entry for that. The next one, a payment for £230 and 50 pence received from W. Smith was posted to J. Smith's account in the receivable ledger. Again, guys, this one will not cause a imbalance. This is an example of error of commission. Not that spelling though. is an error of commission. I put 2M there. Yeah, commission. That's fine. Is it 2M? Yeah, it is 2M's. Commission. Yeah. Okay. Is an error of commission will not have any bearing on it. Why? It will not change. You need to remove it from W. Smith's account and you put it in the J. Smith's account. Therefore, the net effect will be no change whatsoever on the receivable ledger control account or the receivable ledger. Now, last one is a contra adjustment for £400 was posted correctly into the payable ledger control account but missed off in the receivable ledger control account. Say here a contra. What is the contra? Many people ask me, oh, contra, I never heard about the word before. That's another name for an offsetting entry. Offsetting entry will be if your customer is also your supplier. So they will be in both of the balances. So they are part of the balance board down here and so as the balance board down here. So here, the contra entry was £400. What happens was when you're settling their balances, you make an entry into both control accounts to write off the balances on the opposite side. Like, for example, I have a customer, I owe them £600 and they owe me £500. So what we'll do, the balance is £100. One of us settled that balance. The common number of 500s get written off by saying PLCA 500 and here we say RLCA 500. So what we're doing by this, not meant to have 5,000, 500. It's a bit big of a number for me. Okay, so here those two numbers cancel each other out. But what they have said here, the correct adjustment was done on my PLCA. They have done a debit entry, but they failed to do a credit entry into my PLCA. So if I'm going to go look at that here, on here, I will say £400 on the receivable ledger control account because they haven't said anything about the subsidiary ledgers. So therefore, this £400 entry was missed out. So we have done that in that question. So that is to do with the control accounts. You will normally get a question like that way for 4 to 5 marks. Okay, so just keep an eye out for these questions. Now, next one is we're going to look at the bank reconciliation. So we still have about 15 minutes. I won't be able to go through some of that process with you. So here, the purpose of the bank reconciliation is the process to match the balances at the end of the accounting report to check against your bank statement. That means sometimes you may see transactions there which you're not meant to be seeing in those books. What do you need to do? You need to ensure those entries from the bank statement needs to go into your cash book. You update the cash books, and after you have a new cash book balance, you compare against your bank statement by finding your timing differences. The timing differences are two different types. One of them we call the outstanding lodgements, which are the ones I put into my own bank account. I'm expecting that to clear. And then the second one is unpresented checks. These are the checks I given to my suppliers or somebody who wants money from me, and they haven't come across putting them into their own bank account, or they already paid into the bank but they're not cleared yet. So therefore they are the timing differences. So here we start the agreeing on the opening balance on the bank statement in the cash book, agree that item on the bank statement appears in the cash book, you tick them off now, and then any unticked item in the cash book, they are the reconciling items, unpresented check and outstanding lodgement, and anything which is in my bank statement I need to update my cash book with. So here let's do a question or two. Probably I have a couple of questions we'll be able to go through here. Yeah, I have two. So here they have said Jeanette has received her bank statement for the month of September 2016. They're saying here she asked to complete the bank statement or bank reconciliation statement at 30th of September 2016. So we have to do that as it shows there. It says here the bank statement shows an overdrawn balance of 339.75. The cash book has a debit balance of £80.56. So what I need to do though, I need to make sure I take that all those information with a pinch of salt, and then I have to carry on entering my bank reconciliation. So what I'm going to do quickly, I'm going to pick up an account quickly, and then I'll have update my cash book. So I probably have to do that here. So let's see whether we can update the cash book. So here, bank account in my cash book. So it says there, I have a balance of £80 and 56 pence as my balance board down. So I keep that in mind. What are the information I need to update? So they're saying here, the following items are outstanding on either bank statement or cash book. First one is a back receipt from S. Gillespie of £85 has was entered as a credit in the cash book. So here in this scenario, this back's receipt from S. Gillespie means money coming in was entered incorrectly into the cash book as a credit entry. So what we need to do, we need to make sure this get updated properly in my cash book. So therefore, what I need to do, I need to remove this by debiting that once, and then I do that one more time. So this is a correction for that same amount, which is 170. So we do that twice. This is the first correction we do. Next one is, but that's not what they're asking you, but I'm doing it for purpose of me finding the right number later on. They're saying here, the business received a check of £650 and 31 pence from Clancy Limited on 30th of September 2016. The cash book was updated, but the receipt does not appear on the bank statement. So what is the meaning of it? That means my bank hasn't cleared it. So therefore, this is a timing different. This is another name for what we call outstanding lodgements. So here, the check from Clancy Limited, it is your outstanding lodgement for £650 and 31 pence. I will go to the balances in a minute, okay? And then they also say here, a check payment for £95, which Jeanette has sent to Pietrzak Properties has been entered into the cash book but not yet showing on my bank statement. That is also a classic example of something called a unpresented checks. So here, Pietrzak proper piece. So how much is that for? It's for £95. That is not gone through. And then they also saying here, a bank charges of £35 appears on the bank statement but not in the cash book. So this is something I need to update my cash book with. So here is a charge for £35. So what we now have to do, we need to find a new bank balance. So here, the total for this it's going to be £250 and 56. So the balance carried on is going to be equal to that minus that, and then equal to that figure. Oops. So this one is going to be equal to that figure. This is my new balance board down for cash book. I only done that because I need it for later. Okay, so I need it for this question part B here, and this one is for part A. They're asking you, what is the bank reconciliation for 3rd of September? The balance for bank statement is going to be a minus. Remember, this is the only two places you can use the minus. It is £339 and 75 pence. And now, can you notice this? If I add and take this away, will my balance this figure 215.86? So let's find out whether we got it right or wrong. So let's see here, equal to this plus that minus that equal to £215 and 56 pence. Like magic, the numbers all matching now. They're asking here, what is the balance? They're asking you, what is the cash book balance on 30th of September after you dealing with the item? So you're going to say £215 and 56 pence. And is that a debit or a credit balance? So we know for a fact this one is a debit balance and this one is not the answer. So credit, I'm going to simply say, oh, can I strike through it? No, I can't strike through it. No. Yeah, all right. Okay, so just the debit. So I'm going to delete this one. I don't need this. Just the debit balance here. This is a classic example of a level 3 bank reconciliation question. In level 2, you don't see like this way. It's fairly straightforward. You find the ticks, tick, 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 tick here and there. But on this one, you do something kind of out of a way. You're trying to find the errors, correct the errors, and then make the adjustments as we go along. This will not be in your exam. This part I've created, it's something you have to do on top of what you have in your the interface. So if you have draw a T account like this way, it will make your life a lot easier. So let's look at that one more question here. This one here. Now let's look at the next part. The owner of Dowcourt Homes Limited has received a bank statement and tasks you with completing the bank reconciliation. The balance of the bank is £92.28 overdrawn. So let's say here £92.28 because I'm using the negative number here. Okay, so that is the bank statement. They're also saying here cash book currently showing a balance of £1,002 and 72 pence. So let's say here whether I can copy that same way I have done before. Would I be able to do the another entry again? So let's say here balance put down £1,002 and 72 pence. I have that number in mind. They're saying here the following items are outstanding on either the bank statement or cash book. A check of £1,050 from Designs Limited has been paid into the bank and recorded into the cash book, but not yet showing on my bank statement. So therefore, this is a timing difference. And they're also saying here, this is a check from RH Designs. So it is going to be an outstanding lodgement. So RH Designs. And I'm going to say that is for the value of £1,050. Let's look at further. A bank interest receipt of £150 is showing only on the bank statement. So what we need to do? So I'm going to say here, the interest received. So money coming in. So interest received £150, which increases my bank balance, which is I'm not going to be complaining about. £150? Yeah, of course I'll take it. And then a check for £255 has been paid to Bluebell Falls, which is not yet appeared on my bank statement. So this is something we already established before, another timing difference, which is already recorded in the cash book, but not in my statement. We're going to call this your unpresented check. So when we're going to say Bluebell, and it's for £255. And the last bit here, a standing order for electricity cost £450 is showing on the bank statement, but not yet recorded into the cash book. So we need to make sure we say electricity, and that is for the amount of 450 quid. So therefore, the balance now is going to be equal to no, let me do this way. The one equal to that number, and the balance carried down is going to be equal to that minus the figure, and that is going to be equal to that £702 and 72 pence. Let's see whether we make up the same number again on this cash book. According to my bank reconciliation, it's going to be equal to that plus that number minus that number, and it gives you £702 and 72 pence. Can you see this, guys? If I draw this cash book up, it will help automatically to find out what is the number, because if you didn't draw this and you're looking purely at this number, you will not have the right number matching here for you, because you're always going to be somewhere out of the way in this scenario. So it's very important you draw up the cash book parallelly. It will not sometimes show in your exam screen. So please do not expect, oh no, it's not showing in the exam, I don't have to do it. You do also have to write it down. Okay, so I hope these questions make a lot of sense to you guys when it comes to the exam, because when it comes to the disposals and the bank reconciliation, normally they will be part of one question. These disposal will be probably part of your depreciation questions, and disposals will be part of that one, and the bank reconciliation and the control account reconciliation could be part of questions too. Yeah, one and two, these will be part. So sometimes you may get it, sometimes you may not get it, you never know, because there's only three whole questions they're going to ask you from the advanced bookkeeping side of it, out of the six questions you got on the FPS unit. Even though the unit is very big, 2500, which has loads of chapters, when it comes to exam, they can only test you on something, not everything. So bear in mind, whatever you're going to do, it's a little bits count, because you're not going to ignore a part of the subject you think, oh, might not come in the exam. No, that can realistically come in the exam. If that comes in the exam, you ignore those simple things there, they are the ones who's going to give you big headache later on, because the students prioritize most likely to the accruals and prepayments and depreciations. They're the major parts of it, and they ignore the small things like control accounts, and they go wrong there. So make sure, guys, you do a lot of revision on these questions as well before you're sitting for the exam.